Traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Wednesday, June 20th, 2018, and this is the Daily Report for Gold and Silver. Further erosion in precious metals pricing with a strong U.S. equities market and a firm U.S. dollar, both contributing to today's decline. Gold off about $8.60, closing near the lows of the day at $12.70. Silver down about 4 cents on the day. Obviously, a little bit of support due to the industrial component of silver, $16.28. And as I said, a firmer U.S. dollar up only 4 points at $94.77. Now, although the Dow declined by 42 points and closed at 24,656, it was the NASDAQ actually touching close to 7,800, closing at 7781 at a new all-time historical high. Unchanged in terms of Bitcoin futures, 67.35 in the CME Futures Exchange. Gold continues its methodical price decline, currently trading at $1,270.30, a net decline of $8.30, which is the low of the day, as the direct result of market sentiment favoring the U.S. equities markets or a risk-on environment, along with a firm U.S. dollar. Although both dollar strength and a strong equities markets are contributing to today's decline, it's certainly not on an equal basis. I've just put up the Kitco Gold Index, and when I took this screen print, spot gold was trading down $5.50 at $1268.90. And although dollar strength did contribute to today's decline, it only contributed $1.40, whereas selling pressure added the additional $4.10 to result in a $5.50 drawdown. And traders, gold does continue to trade under pressure, now on a new low of the day off $8.80 at $1,269.80. As we said, the minority contribution came from a stronger U.S. dollar up about 6 points at 94.73. We can see a series of tops that have come into the market recently that come in right at around 95. That does also correspond to the high today, which was 98.5. So we definitely have some resistance here, and that does match with a high that occurred back in October and November of last year. That is this high right here. And you can see as I carry this line across that that does match up quite eloquently to our current highs. So we could see the dollar on a technical basis have some resistance. However, as we pointed out yesterday, a break above this on a closing basis would put our next target at about 98 on the dollar index. But even with dollar strength, it's really the incredible run in the equities markets that I believe has provided the majority of the selling pressure as investors and market participants favor the risk-on asset class. We're looking at a daily chart of the NASDAQ, which closed at a new all-time record high today and actually touched on an intraday basis at 7,800 on the index. On a technical basis, it is clear that gold could test some new lows. Each time the market does trade to a new low, it's a new yearly low. And our level right now that we do want to watch is 1267. That particular price point is a 0.78% retracement. And again, that is a retracement of the December-January rally in which gold moved from about 1240 to 1365. It is for those reasons that I believe we could see further selling pressure in gold. And if we do, we have a current target that we want to watch, which comes in at around 1265. And traders, although silver did exhibit a decline in price today, about 4 cents, closing at 1628, when we look at our daily candlestick chart, we can clearly see that the downside pressure in silver was nowhere near what we saw in gold And it is the industrial component of silver that has limited recent declines. However, we still see the potential for further erosion in terms of pricing, and our current level of potential support comes in at approximately $16.10, and that's based upon these series of lows that occurred throughout last month. And traders, lastly, a quick look at Bitcoin futures. This off the CME's 5 Bitcoin futures contract. Nominal gains today, $5 gain, 67.40. We can certainly see that there was some support that came into the market after reaching these lows last week, close to 6,000. However, recent activity has really slowed any kind of upside momentum, and it is critical in terms of a technical level that Bitcoin holds 64 to 6,500 as a baseline. A break below that price point would indicate a test again of 6,000 and below. As we spoke about in our opening letter today, it was really a combination of a firm dollar as well as a strong U.S. equities market that both contributed to the decline in gold. However, it's really the risk on market sentiment that was prevalent because selling pressure outweighed dollar strength by about 4 to 1 in terms of the net drawdown on the day. Right now, on a technical basis, we could see some support come in at around 1265. That's the 0.78% retracement. But if we do get further declines in gold, we'll have to see how it reacts at that price point. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.